the reason I would say that I chose to work on Wall Street was so that I could make a high income. Goldman Sachs was the best ticket out there available.
What has become new to you over the last couple of years as you've sort of sunk deeper into the Bitcoin space?
Yeah, various reasons why I'm much more confident in Bitcoin. One is government policy. Another is just ongoing adoption. Another is distribution of the network. It's taking market share from gold. Gold is important to own, and therefore Bitcoin is even more important to own because its purchasing power, its value is rising at a faster rate than gold.
Welcome back to another episode of Hosting Bitcoin. This is the show where we're exploring the people who are shaping the future of money, wealth, and freedom. Today's guest is someone who has made waves by writing Why Buy Bitcoin? And it's not just because of the title, but because of the clarity and the diligence that he put into it to make it accessible to any kind of investor. Andy Edstrom is a financial advisor, investor, and a macro thinker who bridges Wall Street with Bitcoin principles. He brings a rare blend of institutional knowledge and independent thinking, and he's one of the most impactful voices helping individuals rethink what wealth really means in a Bitcoin-denominated future. Today, we're diving into the evolution of the financial system, investing, Bitcoin Treasury companies, and what it means to protect generational wealth in an age of uncertainty. Andy, thanks for coming on to Hosting Bitcoin with me.
Bo, it's great to see you. I was really pleased to see you in person recently on your home turf. Got to see one of your sites on the recent tour when I was in town for the Bitcoin is for Everyone conference, which I've had the pleasure of speaking at both years. And it's been a good time, more than a good time. It's been a great time 2 years in a row. And it was great seeing you once again and seeing your site and seeing what you've been up to. I learned a lot.
Man, it was great to see you too. And honestly, honored that you spent the time to come out and see what we've been working on too. It's been cool to get a chance to hang out for the last couple of years at the Portland Bitcoin Conference. And I love to, you've got a little blurb on your website that talks about seeing how the financial sausage is made. So as I learned recently, this was the first time that you've seen the Bitcoin sausage made. What was unique to you about getting to see that process in person?
Wow, that's well, I mean, first of all, it was literally my first time on site at a Bitcoin mining operation, so that already checked the box, and that was novel. I guess, I don't think I was surprised, but I was. It was good to see how it is an industrial operation, plus the overlay of software and management. I'm not going to say that was surprising because I have been to other industrial sites in my days investing in industrial companies. We could talk about that. Actually, got one or two stories in that regard, but it was much cleaner. I shouldn't say much cleaner. It was cleaner than your average industrial site. Let's put it that way. Turns out Bitcoin isn't as dirty of an operation as some people imagine. Although, certainly Pierre Rochard, and I'm sure you and others have over the years helped educate people about how actually use of electricity, literally running electricity through some devices is non-polluting. But yeah, I think I think it was fun to see a clean industrial site driven by electricity to learn about the offtake arrangements and sort of how the economics work. And then it was fun to get a little bit of a deeper dive into management of the machines, how you think about managing the entire ASIC fleet with respect to how it's allocated site by site, and, considerations with respect to uptime, considerations with respect to owned equipment versus hosted equipment, sort of all those factors, and getting to sort of think real time about how one might approach management challenges in that regard, and kind of actually see the deployment at the same time. That was all pretty interesting to me.
Yeah, that's actually shocking to me how many people aren't aware that Bitcoin mining is not an emissions producing activity. I mean, I've had conversations with like pretty sophisticated people thinking that we're on site, like releasing some kind of emission into the atmosphere. I'm like, no, it's just like you're running a bunch of laptops in the same place. It's not at all what you think it is.
That's right. That's right. They're slightly louder than the average laptop, although that was also a fun stat, which was the site we saw was right next to a highway, and frankly, the highway created a lot more noise than the mining operation.
100%. Well, it's cool to be able to participate in a first for someone who, has written a very prolific book in the Bitcoin space. And you've had the benefit now, 6 years in to having first published that, of, I would imagine, getting to learn quite a bit more. I mean, if I think about my journey, started in 2015, but it didn't really start until 5 or 6 years later, and it just kept on going deeper and deeper. What has become new to you over the last couple of years as you've sort of sunk deeper into the Bitcoin space? What's changed about how you see it?
I'm sort of of two minds. Obviously, when I published the book, it was mostly an approach from an investment perspective, right? It was like, okay, with my investor hat on, is Bitcoin attractive as an investment? Why is it attractive? What's its potential upside? And what are the various risks associated with an investment in Bitcoin? And that mostly overlaps with other elements of physical reality when it comes to Bitcoin, of course. Mining centralization. Like, obviously, I talked about that in the book. Where has that gone from 6 years ago to today? I'd say on the one hand, it's gotten better, and on the other hand, it's still a big problem. So, you and other diligent entrepreneurs are helping with the decentralization piece. But obviously, we've still got a lot of centralization in terms of the pools, and we have massive centralization in terms of the ASIC manufacturing. Well, both the design and the manufacturing, right? Those being essentially two monopoly or near monopoly providers, and that was true back in the day, and it's still true today, I think. So I've definitely filled in, some gaps in my understanding. I think as far as risks are concerned, not that much has changed in the story. It's still kind of the 40 pages, what I call the 40 pages of FUD. I think many of those risk factors are still intact, although most of them have been reduced over time. Certainly anything related to government policy risk has reduced, although we're not all the way through that, all through the way through that challenge yet. And we could talk about that. On price, one major thing that has changed is my confidence in the success case. So 6 years ago, I presented, I think it was 3 scenarios, and this was obviously a gross oversimplification, but a little simplification I think is useful for your average reader or even your average analyst. And the 3 scenarios were, one was failure, it essentially goes to zero. 2 was, it doesn't go anywhere much from here, like it's kind of reached its potential. And then scenario 3 was the upside scenario. And I assigned those equal probabilities 6 years ago. And I think that was a bit conservative at the time. And that was by design, because I didn't want to go full Nutter Maxi, because I was trying to reach a broader audience and I wanted to be taken seriously and not dismissed out of hand. But let's just say that my probability for the success case has gone up significantly over time for various reasons. And yet, we still haven't reached the numerical price target I put in the book. So I committed the cardinal sin of picking a number and a date. However, I was wise enough to pick a date far enough out. So it was a 10-year target, right? And the 10-year target was 8 trillion, or call it 400K roughly per Bitcoin. And at publication, I think, well, when I started writing 6.5 years ago, the price was about 3K. That was the bottom. At publication, I think the price is between 8K and 9K. Today we're at 112 or so. And I guess it's now 4 years until the 10-year mark. So are we 4 years away from 400K? I think there's a reasonable chance. We'll have to see how it plays out. So yeah, definitely that. But my probability that I would assign to the quote unquote success case for Bitcoin is obviously substantially higher than it was 6 years ago because of various reasons. One is government policy. Another is just ongoing adoption. Another is, is distribution of the network. Not least, the fact that we don't have the vast majority of mining in China anymore. So that's a positive. Various reasons why I'm much more confident in Bitcoin reaching its potential, or at least reaching a significant fraction of its potential in the long run.
I do appreciate that you still, even after years of seeing the success thesis, like pretty well validated. And I would say of the calls that people have made with numbers and dates attached to them, yours is shaking out pretty well. I mean, like you're pretty on track for that to be accurate, if not a little conservative, which I think is the way to be if you're going to be if you're going to be making predictions. You might as well be a little bit conservative about it. Um, as you have seen it evolve, you've had your own allocation to worry about, your own decision making framework, but you also help other people make these decisions. How is the way that you've talked to clients about this change over the last few years?
Yeah. One major change, and that's hard money, or what I call hard money assets. So clients in the past did not get this at all. Maybe a few did, but the premise being digital gold. Okay. And let's not, I'll put it this way: Bitcoin reaching its full potential would be far greater than outstripping gold's value, right? But that's more speculative. That'll probably take longer. The piece of the thesis, which is digital gold, digital version of hard money, has become much more salient, much more relevant. Clients are getting it more. Now, I think that's partly because gold has had a tremendous run, right? People like to talk about, normie people like to talk about stocks. The yellow metal, the pet rocks had a pretty decent run compared to your average stock in your portfolio. And also, we've lived through major geopolitical changes like the Ukraine invasion, like the associated cutoff of dollar and other fiat denominated assets. The Russian government had hundreds of billions of assets on paper, fiat assets that they lost access to. That was eye opening. And then also we've had central banks, including and especially those of non-U.S. allied countries, let's call them. Obviously Russia and China, but those aren't the only ones. Those guys have been accumulating, and actually other central banks have been accumulating as well. So gold's had this great run, and for good reasons in terms of how the facts and circumstances have changed in the last number of years. And so clients are starting to get that. They are starting to get the value of hard money in a portfolio, number one. And then number two, I guess it's been long enough now that they're seeing that Bitcoin is gaining market share of hard money assets. And as gold grows in value, that's just more market share for it to eat. And so that has been the biggest change, I would say, in the story with respect to clients having some understanding of Bitcoin, because prior to that, yeah, I think it was much more nebulous. I think it was much more speculative. I think it was much more, you know, it looked a lot more like a tech stock to them. I mean, and that's not to say that it doesn't still look like a tech stock to some of them, but I think they're coming to internalize the fact that it's taking market share from gold. Gold is important to own, and therefore Bitcoin is even more important to own because its purchasing power, its value is rising at a faster rate than gold.
It's great to see it progress through these different stages of adoption, different stages of maturity, just like you go first from store of value to medium of exchange to unit of account. There's a psychological place that this occupies for most of the people that have any exposure to it. And I loved hearing you recently on a podcast with Build with Bitcoin, where you talked about how a lot of interest from your clients and even other advisors is still coming from this basis in essentially fear, where hard money assets typically are getting attention or getting traction because people are afraid of something happening. And that you're looking forward to when that shifts to a basis of optimism, of creating a better world. And I think as miners, we totally get this because we're building new infrastructure. We're actively reshaping the way that energy systems function. And so we can see this kind of like optimistic development case. But I'm curious, for the wider audience, most of the capital and attention in the world, what do you think is still needed to shift from this sort of flight to safety attitude up to like the creation of an abundant world attitude toward Bitcoin?
I suppose it can be a combination of continued adoption and number go up. Like, obviously, the value going up helps. I think that it might have more to do with the much bigger picture in terms of geopolitics and cycles. And now I'm thinking of fourth turning type stuff. I think it probably has more to do with the world and people's reflections on it than Bitcoin. It probably has very little to do with Bitcoin, arguably. It's like, so there's an economist, I think it was this week's edition, or no, I guess it was last week's edition. And there's an article about art, and it's about people's reaction to art, specifically their emotional reaction to art of the time based on survey data. And the maybe not surprising outcome is that people's emotional reactions to the art of the day have a lot more to do with the day than the art. Like, is it Guernica? Is it art created during time of war? Or is it art created during time of peace? And surprise, surprise, people's emotional reaction, basically, whether they have sort of a positive or negative valence to the art that's offered, has a lot more to do with what's the state of the world at the time. And remember, because this is survey, sort of statistical average. It's not any particular individual's reaction to it. It's an average of people's reactions. And so I think about that. I think about, are people generally hopeful and optimistic about the world? You listen to the Silicon Valley, Singularity University guys, the X Prize guy. I'm blanking on his name. Big tech promoter. And those guys are super optimistic for Bitcoin. The one guy I think went to college with Michael Saylor, and he's talking about how he's got the majority of at least his liquid net worth in Bitcoin, although he does a bunch of venture capital investing. So my guess is he's got a bunch of illiquid stuff too. It's not Bitcoin. Nevertheless, he's very optimistic for Bitcoin for, I think, optimistic reasons. But yeah, he's sort of a techno utopian Silicon Valley guy. Has made tons and tons of money off of this wave of innovation, and probably that will continue. And his life's great. And then, then I think the probably average American is more concerned about AI disruption and job loss and threat from China and God knows what else, climate change. I don't know, various existential threats to the world that get continuously fed back to them on social media or what have you. So yeah, I suspect that the optimistic time for Bitcoin will be when the world is more optimistic, or the average American or the average person in the world is more optimistic. And that probably has a lot more to do with how the rest of this decade shakes out in various ways.
That honestly couldn't have asked for a better answer. And that's really insightful because, as you said, it doesn't even have to be a financial asset. It can be something like art, where the context in which that thing exists has so much more to do with how it's perceived than the thing itself. And definitely a believer in the fourth turning methodology of kind of looking at cycles of history, where now, people are just clinging to safety as sort of old structures seem to be falling apart in slow motion. You're looking for anything that's a flight to at least a sense of safety. And in the next phase of kind of like rebuilding, restructuring, it can be a much more optimistic tone around this sort of new foundation. So I think that tracks really well.
Yeah, and here's the bad news, Bo, is that there's nothing you and I can do about that, really, or anyone else listening to this conversation or watching this conversation. Now, the good news is, as we know, everything's good for Bitcoin. Or put differently, there are lots and lots of ways for Bitcoin to win, and it has been winning through already multiple cycles and multiple years. Already closing in on the end of decade number 2. Its design and the world's need for it in aggregate are such that it has been winning, it's likely to keep winning, and for good reasons and for bad reasons. And it's this complex symbiotic system that's so much bigger than any one person or any one company that all we can do is build enterprises to support it as best we can and educate people as best we can as it follows its own path to broader adoption.
Totally agree. May feel like shifting gears a little bit, but speaking of kind of backdrop context, what role did money occupy for you growing up? Like what early experiences brought you into the financial world? Because Bitcoin's not your first foray into finance in general, and most people don't just go straight into the financial world. There's usually some kind of early experience that draws you into this. What got you
Yes.
curious about money and finance?
Well, let's go all the way back to my upbringing, which was I was raised middle class. Although my family became wealthier over time, there was always a bit of a scarcity mentality and scarcity mindset. I think that came from my dad, who grew up in a family of 7, sort of probably lower middle class family of 7. The type of dynamic where you better show up to dinner on time, because if you're late, the food will already have gotten eaten. There won't be, you learn to eat quickly, let's say, in that kind of environment. And he had to make his own way completely. I mean, he did go to college, but he paid his own way. I think my grandfather, or I should say my grandparents, gave him like, a few $100, and he was out the door when he turned 18. So I was always a saver, and I always lived below my means. And my wife would say too much so, even to this day. So I'm not one of those guys who necessarily became more of a penny pincher or developed an improved time preference, as we like to say in Bitcoin. I was probably already kind of there in terms of saving and investing. And related to that was, I think I did want to make money. I did want to be wealthier rather than not wealthier. And so that instigated an interest in finance and Wall Street, which was like the most obvious way to make money, right? At least the most obvious to me. And so I would say those were some of the threads along the way that got me interested in wealth. Now, that's a different thing than interested in money as medium of exchange or store of value. I was very interested in the unit of account aspect. I wanted to have lots of those units of account. But I knew nothing about the actual underpinnings of money. I knew nothing or almost nothing about the answer to the question, what is money, at a more fundamental level. That came with studying and accumulation of knowledge about Bitcoin. Bitcoin was the forcing function, as it is, I think, for many people, including and especially people that make their career in traditional finance. That is one of the many ironies, is that swimming in the sea of fiat does not teach you anything about the underpinnings of money. Quite the opposite. You just get used to it. So yeah, that's a few thoughts about how I got interested in both wealth and as well in the actual underpinnings of money.
So it sounds to me like I like that you say you came from the mindset of like a very heavy saver. So that's very different than most people's early psychology when they're thinking about investments. They're usually looking at creation or growth more so than preservation. How did you walk the line between wealth creation and more of like wealth defending and kind of defensive wealth strategies as you were in your early career?
Oh, that's interesting. So don't get me wrong. I was still seeking growth. I was still plenty greedy and willing to risk capital. So it was just that the saving component of it, I guess I viewed as step one, as in, obviously, if you have no capital to invest, then your dollars of return will be zero. so, so yes, I'd played around a little bit, I guess, in like junior high and high school with stocks, although not that much. Um, by college, I think I was picking a few investments. And then the reason I would say that I chose to work on Wall Street was so that I could make a high income, hopefully save a decent proportion of that, and then invest that income. And so that was the path for me. So yeah, no, I was not overly concerned with capital preservation, but I was concerned with finding a way to accumulate enough that I'd have enough of a capital base that the investing would actually matter.
And you seemingly went through pretty much every level of the financial stack, whether it was public markets, private equity. You've been in wealth management, advising. What catalyzed your shifts between the different layers of being in the financial world? Like what made you start to navigate closer and closer to what now seems like pretty heavy Bitcoin focus, but there had to be a progression there.
Yeah, so there's a few steps. I mean, step one obviously was get the Wall Street job, with relatively high income. And that was investment banking, and Goldman Sachs was kind of the best ticket out there available. Now, what I learned pretty quickly, and keep in mind this is 20 plus years ago, was that already the best, or the better way to make money than going to work in investment banking and Wall Street was to work on what we call the buy side. So if Goldman Sachs and the investment banks are the quote sell side, the quote buy side is the guys who actually have the money, that have the funds. They raise the funds, they invest the capital. And those were the guys who at the time, made made the truly eye-watering income. By the way, I'm generalizing. I'm talking about the guys, it's like any other industry. It may be actually even more skewed than most industries, like the very top performing individuals and top performing firms make by far the lion's share of the profits, and compensation and income. So that it's definitely a wide distribution, but let's just say that's where the biggest potential payoffs were available. So I shifted to private equity, and then it just happened to be that job opportunity wanted to relocate me. I didn't want to relocate, so I had a chance to move back to Los Angeles, which was home for me. And so I joined a fund out here in LA. And so that was kind of the first decade. So I was getting, I guess, arguably even closer to the fiat spigot, to the Cantillon spigot, so to speak. And then I had an unusual life circumstance, which was I had an opportunity to get into the family business. So our firm, Westcap Group, is a wealth manager, and most people don't make the move from the buy side to wealth management. But I had a unique opportunity since it was the family business. So that's how I made that hop. And also by that time, I was actually starting to read the writing on the wall, which was actually the fiat finance business, especially the investing business, was getting pretty mature. It's a little bit like if you wound back the clock to 20 years ago, 20 plus years ago, and you asked probably the average college grad or my average classmate, like, hey, what's the best industry to go into in terms of your earnings prospects? And people would have said finance, but that's because it was already pretty mature. And already the puck was moving from the banks on Wall Street, to private equity and hedge funds. And by the way, wind the clock forward 20 years, right? Now, those are very mature industries. One is arguably in decline. I would say the hedge fund business. Private equity is still hanging on, although it may be at an inflection point, which I'm happy to talk about. But if you wound back the clock, earlier, it would have been smarter to pick tech, right? Because tech in general hadn't reached its potential. It was earlier in its development cycle. This was even a decade and a half before Mark Andreessen opined that software was eating the world. The tech was eating the world, or maybe it was a decade before. But obviously, I didn't have the foresight. I didn't have the vision at that time, to move in the tech direction. And then, of course, full circle to Bitcoin. What is Bitcoin? Well, it's Bitcoin. It's tech. Finally eating money. I mean, the fintech trend or wave. I'm talking about PayPal. I'm talking about Venmo. I'm talking about Square. I'm talking about various payment apps, and also the companies that support them, and the companies that do it for enterprises. That started earlier than Bitcoin, but Bitcoin is the first internet native, distributed protocol solution to money. So in some sense, I've gotten a chance to rewind 20 years, right? Like which career route should I have pursued, or which opportunity should I have pursued? Should I have pursued fiat finance? No, but I did. I should have pursued the internet, or working around the internet. And now I finally get a chance to be involved with the internet native solution to money. So yeah, it's a second bite at the apple. It's or really, I missed the first bite, but it's a second chance to take a swing, and hopefully, so far the bat has connected with the ball, and that's kind of where we are today. That's where I am today.
And you mentioned most people don't go from buy side to wealth management. Why is that typically?
So the short answer is your potential earnings are more limited in wealth management on average. That's what it comes down to. It's like, okay, if you want to stay on the track that has a shot at truly absurd compensation levels. Generally speaking, wealth management, doesn't provide that opportunity for most people. It helps though. It helps that it's the family business, for me, which gives me some bennies that your average, just career person who's working for a third person major firm probably doesn't have.
Have you ever felt like you've done everything right, built the business, made smart investments, and yet there's still one piece missing? If you're someone who believes in Bitcoin but hasn't yet explored mining, let me introduce you to something that most people never even realize exists, and that is fully managed Bitcoin mining with Abundant Mines. We help high net worth individuals like you own industrial grade mining infrastructure without ever touching the machines. It's hands free, professionally hosted, and designed to generate passive income by turning electricity into Bitcoin every single day. It's tax advantaged, it's asset backed, and for many of our clients, it's become one of the smartest moves that they've ever made in their investing career. So if you're ready to take the next step into real Bitcoin ownership, not just holding, but producing it at a discount, visit abundantminds.com. That's abundantminds.com and see why this strategy is changing the game for serious investors. And what was that shift like for you? I mean, obviously, you had the choice to not do that. So, apart from just knowing that you were potentially going to take less money, there had to be something else that was maybe calling you into that. What shift in mindset did that take from you in terms of how you actually navigated the financial world?
Yeah, I think, to be honest with you, I'm not sure it was that much of a shift in mindset because since it was the family business, the economic opportunity was arguably comparable. I had some ideas about what direction to take the business, how to grow it, and I had the opportunity essentially to have a larger percentage of the potential upside, than someone on a pure arm's length basis with some random corporation would probably have. It wasn't sort of a sacrifice in compensation or a significant sacrifice in terms of compensation earnings potential, with, I guess, the caveat that I would say, I think I probably realized that I wasn't willing to toil quite to the level, that the guys that make it all the way to the top on the buy side typically do, which is obviously it's extremely competitive, and it is extremely competitive because the potential payoff is so high. I think I also came to realize. So here's a shift in perspective, which was my realization that the private equity and hedge fund world had matured significantly. Was also a realization that there wasn't going to be as much room at the top. I think the reality is when these industries were more nascent, there were a lot more startups. There were a lot more guys that made partner. I mean, there was just a lot more opportunity to get the really outsized financial payoff. And it became obvious after the global financial crisis that the world had changed in that regard. So that was the one, I would say, piece of the analysis where the probability distribution changed. It was like, oh, in a post global financial crisis world, like, what are the odds you can successfully go out on your own and raise a fund, or what are the odds, that you're going to make partner at a major fund? And the answer was substantially reduced. So I guess I would say that was probably the major change in my assessment of the competitive landscape.
And at the time, this was not I mean, Bitcoin was not a part of the picture, I imagine, at this point in the shift, right? This came much later.
Yeah, if only I was a true OG, who is out there mining. If only I'd seen the Genesis block as it was mined, as the chancellor was on the brink of second bailout. Yeah, that would have been good. Yeah, I wish I'd been around in the early days. I would say the main thing, I wasn't a super libertarian. I was not super technically competent, like I wasn't a software programmer, not on the cypherpunk mailing list or anything like that. So I was not around or paying attention at all. I was totally clueless in the very early days. And yeah, my first touch point was 2013. I read an Economist article about it and I didn't understand it at all. Second touch point was 2016. I think it was it was actually the Ethereum hard fork. The DAO hack happened, and I didn't get that at all. And it wasn't until 2017 when my very smart friend Arun Rao, kind of, sent me an email, said, "Hey, you might want to pay attention to this," and that's when I started to pay attention, and the price was going up, and so I was interested in chasing the rabbit, just like every other person in finance who's interested in making profits, and that was the start of the journey for me.
So how long after that point, when it clicked for you on some level, did it become something you were starting to talk to wealth management clients about, that at some point you discovered MicroStrategy as well? Like how did this all unfold into, oh man, now I got to tell my clients about this and turn this into a very Bitcoin focused advisory? Or maybe it's not a Bitcoin focused advisory. So
Yeah.
correct me there.
So, I wrote a research report essentially in 2017, and it was about crypto, right? It wasn't just about Bitcoin. I hadn't figured out the distinction yet. And so I went through the cycle, went through the blow off top, 20K Bitcoin, back down to 3K Bitcoin. And it was at 3K Bitcoin in the depths of that bear market in January of 2019 that I had my moment of pain. And by the way, there was one thing that happened along the way, of course, which was, risking my own personal capital and then risking more of it specifically on Bitcoin in 2018 before like the final dump capitulation. So like I have very visceral memories of $8,600 Bitcoin. Okay, push half my retirement portfolio into it with my wife's full knowledge, God bless her, and then dump to immediately from 8,600 to 6,600, which doesn't sound like big numbers today, but percentage wise, that was pretty painful. And then deciding, oh yeah, I'm probably not going to get a better price than this, and dumping the rest of the retirement account into it. And then literally within, I think it was 6 weeks, we're below 4K, right? So I'm immediately 50, 60%, 70% underwater on like the incremental, retirement money that I put into it. Okay. So it's January, it's a new year. I'm way underwater on my investment, and I'm asking myself, wow, was I right or was I wrong? I better really dive deep, really make sure that my investment thesis is complete, that I factored in all the risks. And so that was the genesis of the book. And I realized, well, if I'm going to do that, I might as well put it in a format that my colleagues understand it. And moreover, I might as well put it in a format that my clients understand it and that the average intelligent reader can understand. And so that was how the book came about. And it was the day, or maybe it was the day after publication of the book. So September 2nd, 2019, that I bought the Bitcoin Trust for clients. That was the first buy I made. And I knew that they were going to vomit all over it. Okay. And so at least I had this thing that I could beat them over the head with. I mean, gently persuade them with. So I sent copies to all my clients, and, the message was something along the lines of, I probably said you own this now, but whether or not I said you own this now, it was small size, by the way. It was a very small position. But if you have any questions, step one, read the book. And then step two, I'm happy to answer your questions. That's kind of how it went. And obviously, over time accumulated more for clients. That gets us to today where Bitcoin is it's a significant portion of the overall portfolio, and it's a significant portion of the hard money asset portion of the portfolio, as is gold, but roughly equal positions in Bitcoin and gold. And I'm sure my allocation in hard money assets and therefore gold and therefore Bitcoin is far higher than your average wealth manager's allocation. Although I think the world is starting to move in my direction. And that's kind of where we sit today.
One of my favorite scenes or sequences in The Big Short is when Burry, just makes this call with essentially 100% of his fund, and you start to see everybody rushing to try and get redemptions, and he has to do a lockup. Was there any kind of resistance like that when you first made this move? I imagine it was done very responsibly, and it wasn't anywhere close to 100% of the fund. So, would love to know if you got any interesting calls.
The difference was definitely a matter of degree and difference in what does it say? Quantity has a quality all its own, so to speak. So no, I didn't go huge into it. I took baby steps. There were a number of clients who were, let's say, skeptical, who kind of took the view that this sounds like a terrible idea. Yeah, but it's a small enough part of the portfolio that I can afford to be wrong, or I should say I can afford for my wealth manager, my financial advisor, to be wrong, and I won't fire him just yet. We'll see how this plays out. And then there actually were still to this day, I think, 2 clients that just put blanket prohibition and have remained in that camp, like unwilling to own it ever. But even those conversations were relatively cordial. There wasn't any flowery language or heated discussions like we had like you had in The Big Short. Is this by the way? Do we have to keep the language clean for this podcast?
You're fine.
Yeah, I remember the guy yelling at Michael Burry, "Give me back my fucking money!" Yeah, so I didn't have any of those discussions, fortunately. But yeah, there was definitely some pushback, and it was what you'd expect. It was, price was obviously way down from the peak. There was a second round of pushback, not surprisingly, after the whole FTX and Terra Luna and various levered unwinds problem that we all had the pleasure of living through in 2021 and 2022. So that happened, and that was another round of explaining, let's say, because of the obvious association between everything crypto and everything that blew up and Bitcoin itself, even though, as you and I and our listeners know, Bitcoin is its own thing. So there was that cycle. So yeah, so I guess, I've kind of lived through 2 cycles, but I, in some sense, dodged the first cycle with clients by arming myself with the thesis in the book and delivering that to them, and also buying for them at a time when, COVID was a bit of a shock, but even then, their cost basis was, and their sizing was probably such that it wasn't causing too much heartburn. Yeah. So I'm not so much, Bo, I'm not that much of a hero. Let's be honest. I didn't take that much risk,
no,
quote unquote risk with my clients' portfolios. In retrospect, who knows? I probably should have taken more.
I don't think anybody the saying in the military that I've heard from one of my coaches is no fast hands in the cockpit, and I don't think anybody wants their wealth manager to have uber fast hands with a asset with such a high amount of volatility, even if it's to the upside most of the time.
Yeah.
Funny enough, though, today we find ourselves in kind of an echo of some interesting sorts of leverage, if you want to call it that, with these Bitcoin treasury companies, which we seem to have a new one every day. And I'm curious. I mean, for most people, I think they know of MicroStrategy, now Strategy, and then they see these what might look like carbon copies, just smaller, and are like, "What is this? Like, why is this seem to be working? Why are so many of these being spun up?" Uh, what do you think about these? What's the difference between like strategy and many of these others, apart from just size? And kind of like, give me your take on where we sit now in mid, close to Q3 ending in 2025 of these treasury companies.
Yeah, I mean, it's been a fascinating journey to watch, even, play a small role in. Going back to 2020, I made a public call that the Bitcoin or that the then MicroStrategy balance sheet looked a little bit underlevered, and maybe they could take on some debt to buy Bitcoin. And I had no idea how far Saylor and Fong and the team would take it. No idea at that point.
They just framed
Um,
your tweet and then had it at every meeting.
no, I think they I think they figured it out themselves. I mean, somehow, Michael found me and started following me and put my book on hope.com. So he trod his own path, and he has been a brilliant financial engineer. I mean, he's obviously a brilliant guy, period. And he's executed, and wow, has he created a lot of equity value for his shareholders. So that's a fact, right? 5 years plus since he first bought Bitcoin, with his cash in his treasury. And as you pointed out, okay, now finally the copycats are popping off like rabbits. And it took a while, partly because of the downturn in 2022. I think it's partly a reflection of bull market and froth. And that's true both in Bitcoin itself and markets in general. Like, are there signs of froth in financial markets in general? Yeah, you betcha. I mean, AI is on a tear. Nuclear stocks, quantum computing stocks that have no actual real business, are trading at multi-billion-dollar valuations. Meme stocks are back with a vengeance. I mean, there's a lot going on. So is that part of the story? Yeah, that's part of the story. Is it also part of the story that whales have found a way to, offload some of their coins into entities and either capture a premium or at minimum, transmute them into a stock, which is more leverageable, more marginable? I'm talking about at the equity level. Like if I'm posting coins to borrow against, most people are paying double-digit interest rates. If you're posting shares, maybe you get a better interest rate and you can borrow against that, rather than selling coins and paying capital gains taxes. So there's some of that going on. I think also there's a huge range of players in the space, and it's everything from tiny microcaps with otherwise failing businesses, to, on the other end, strategy having by far the fattest stack of Bitcoin among all these corporates, like by more than an order of magnitude. And I guess only the ETFs are, comparable, but that's a different model. So it contains multitudes. It has been interesting to watch the narrative evolve when these things were trading at maximum multiples of net asset value, maximum MNAVs. There were people in the space talking about how the multiple of balance sheet Bitcoin should be comparable to a price earnings multiple, which was bananas and obviously crazy at the time. And yet some people were saying that. And to put a finer point on it, I'm talking about like, a company trades at 20 times earnings, so it should trade not so it should trade at 20 times the Bitcoin on the balance sheet, which is sort of
That's
conflating an
insane.
earnings multiple concept with a multiple of a balance sheet, a book value concept.
And just for reference, strategy right now is like what, 1.5 or 1.6?
Yes,
Like
exactly right. Yep,
definitely
it's
not
in that
20.
ballpark. Right, exactly, not 20. And I don't know that I actually don't think any of these things ever quite got to 20, but some of them got to 10, at least, I think. And so yeah, so we had a bit of a bubble already, and some of these names have retraced 40% off their highs, but others have retraced like 80% off their highs. So that was interesting. That was exciting, I guess. And so, where we are in the market today is I'm still a believer in the 4-year cycle. I think we're still probably in a bull market. And so, I think some of these guys will do well in the long run, but also a bunch will fail. Um, and that's usually the way it goes when you have a Cambrian explosion of some new thing. You end up with a culling of the herd in the long run. I also think it's interesting to think about what is the right MNAV multiple. You mentioned strategy at 1.5, 1.6. Ballpark, that seems like in the range of reasonable to me. I often think of two comps. I think of extremely smart capital allocators like Warren Buffett. Sometimes Berkshire would trade up to 2 times book value. I think of extremely well managed banks, which trade up to 2 times book value. So kind of anywhere between 1 and 2 seems logical to me, but also in a downturn, like in a real bear market, can slip below 1, which is also true of, it's definitely true of banks. I don't know if it's true of Berkshire, to be honest with you. Have to go look at the history. So yeah, so the market's maturing. People are figuring it out, and some will be successful. The ones that achieve scale in markets or geographies where they have some comparative advantage to the alternatives, like whether it's a taxation benefit or whether it's other restrictions on how capital gets allocated within a particular market that that funnels money toward one of these entities. If you can get to scale and be the market leader, that's probably an opportunity that could easily outperform Bitcoin in the long run. By the way, outperform in quotation marks, right? In dollar terms, in numerical terms. That's assuming you get to keep your ownership stake. Not your stock certificates, not your levered Bitcoin entity equity. Doesn't have the same ring as not your keys, not your coins, or not your keys, not your cheese, but something to consider. Yeah, those are some of the thoughts I have. It's been, if I'm honest, it's been a little disconcerting seeing a number of my Bitcoiner friends get involved in these things. I'm not. I guess some of them are doing it for the right reasons. Others, I'm a little concerned that it's a distraction. And I'm also, I definitely see some people allocating some of their cold storage Bitcoin over to these things, and that seems like it could work out badly for some of them. But it's not my money. All I can do is sort of watch and observe, and I don't make any statements about. Well, let me put it this way. I don't own any of this stuff at the moment. I have off and on, at times owned some of these names, and and I've not taken on a promoter role for various reasons. But that's kind of how I see the space where we sit. It looks like the mini bubble of 2024, 2025 has kind of deflated, but we could see another upswing even in the short term if the Bitcoin bull market continues, which I think is more likely than not. And then, yeah, the bigger question is which of these names will get shaken out, get acquired, get unwound. That'll be interesting to observe. I got my popcorn. I'll be watching and in some cases maybe trading.
I think I've heard you say that, especially for people that already own quite a bit of Bitcoin, that it could be a result of just getting bored with the way that Bitcoin has been trading so far, that they like to get involved with these things. I don't know that boredom is a great emotion to make decisions from for your financial future, but that does make me want to ask, you've had the chance to help people navigate financial lives now for many years, and you've gotten to see quite a lot of how this works, how it works on people, how it works in their psychologies. As we get toward the end of this, I'd love to, if you don't mind, have you share some of the psychological tools that you think are kind of winning ways to navigate a financial life and making these sorts of decisions, especially when you're in a weird market, when you're thinking about Bitcoin, when you're thinking about levered treasury companies. There's all sorts of ways that these can play games on your mind. And I'd love to just get a peek into how you think about it, how you navigate it.
Well, Bo, you nailed the boredom comment. There's definitely a cohort who were bored, and the cocaine of Bitcoin's volatility wasn't enough of them or for them anymore, so they needed to move to the fentanyl, and that's a higher high or a stronger fix. May be part of the story. So let's start there. Yeah, I think that first of all, the actual studies show empirically that pain of loss is greater than euphoria of gain. And the more volatile an asset, the more down days there are relative to up days. And so if you're watching the thing all the time, you're all else equal, you're gonna cause yourself more pain than pleasure watching the vol all the time, because the down days hurt more than the up days feel good. So just recognize that psychological fact, that it's already painful enough to hodl Bitcoin in the long run if you're paying attention to the dollar price of it. And so consider whether you really need that extra anxiety in your life. I don't. Second thing to consider is, obviously there's the portfolio concentration question, which is, I'm pretty sure we're right about Bitcoin. Also, we could be wrong about Bitcoin. In other words, the probability of failure is not zero. Also, even if you put the probability of failure at zero in the long run, we could go through a long period of pain, before its upside potential is realized. So, and that could have to do with politics or anything else. So those are just factors to consider. And so the factors to consider are, there's the whole like get on zero, like own only Bitcoin camp. I'm not in that camp. And the various considerations are, do you really want to have all your assets? Can you, in this thing, can you bear the volatility? What's the right amount of volatility for you? Can you afford a markdown for a long period of time or a total loss? How much correlation is there, with your earnings? You're in the mining business, so you've got an extra layer of leverage on spot Bitcoin, arguably, although it is a unique, it has its own unique cyclical factors and drivers, the mining business I'm talking about. So these are all considerations, and then of course there's the level of knowledge and comfort. And this is big with my clients. So most of my clients do not have nearly the level of knowledge of Bitcoin that probably most of our listeners do. And so they're not as comfortable with it, and they're not going to be as willing to live through potentially long bear markets. So, and that's that's just a reality for most people who hire someone to manage their portfolio of assets, which is the better you know an asset, the more comfortable you are with volatility in that asset's price level. So that's another major consideration. And then, of course, it's not just you. I mean, for some of you, it is just you. For all the the 20-something single off-grid camper van listeners, have at it, do what you want. Only your parent, I guess, only your family members, your parents and your siblings and your friends, are the ones that have much psychological exposure to your situation. But if you have kids or you have a spouse, there's other factors. There's other factors to consider. So, yeah, I think for my clients, it's actually more about they don't have the depth of knowledge, so their tolerance for volatility in the price is much lower than an expert's would be, and that's kind of the gap in, I guess, the gap in what I think the gap in my knowledge is versus theirs is a major governing factor. Um, and then, yeah, the last factor, I guess, for all the hardcore Bitcoiners who do have deep understanding of it is just, yeah, how do you want to live your life? If the cycles continue, like, how do you feel about living through another down cycle that lasts years? Is this a risk you really want to take? Risk in quotation marks, basically how much pain do you want to take and for how long? And that may help you size your position. Help you size your position. And then I guess one final comment is I don't really trust any of the leverage providers fully yet. There's some I trust more than others. And so, I just return to the issue of, well, if you're not selling but you're borrowing, that's fine, but just recognize that those are not your coins, and you could get a markdown, and there's no bottom to the Bitcoin price in the short term. So even if you're only borrowing 10% of what you're posting as collateral, then yeah, there's a very low probability that you'll get rugged. But also, if it does come to pass, it's going to be really painful. And hopefully some years from now, we'll live in a world where there's true term debt against Bitcoin collateral, right? Where you can't get rugged, mark to market, margin called. And that'll be a better world. And I look forward to living in that world, but we're not in that world just yet.
That to me is just a sign of how early we still are, is how
Yes.
immature the lending markets with Bitcoin collateral are.
Yeah, no, 100%. It's still very early days. We're still very early. I want to turn it on you for a second, Bo. Back to the question of, whether people see Bitcoin as a hopeful technology or whether they adopt it out of fear or anything else. What's been the mindset change in the mining business or people's perception of the mining business in the years since you've been at it?
I think you mentioned it a little bit, where it's this other way of potentially getting levered in Bitcoin, where you can grow a balance sheet past just what you can buy spot when you're thinking about it in infrastructure terms.
Hmm.
And many people think of it as a way to get more upside than Bitcoin. If you are good at doing what you're doing, you've got great partners, great operators, great energy costs, the run of the mill criteria that you need to have in order for it to not all blow up and stop working, which was our first entry, was it not working well. And
Mm-hmm.
part of the reason we built the business, to make sure that it worked well for people that did want to get into this. But I do see it becoming much more of like utilities, like a utility scale. Effectively, nobody thinks of utilities as high growth businesses, and yet they're typically very profitable and have a great defensible position and produce really reliable recurring cash flows. So for me, the psychological shift was not just am I going to get more Bitcoin, but can I guarantee myself a future stream of Bitcoin well into the future after strategy and the ETFs have bought all of it off the spot market? So for me, it was sovereign access and a steady stream of that sovereign access. And that is the way that I see this evolving further into the future, is less and less speculation and hunting for just obscene upside, and more like what we're seeing this become is, everybody in their retirement portfolio should have some Bitcoin. I mean, I would like a Bitcoin income stream forever into the future. And so that's just the way that I look at having a mining position.
All right, here's to Bitcoin becoming more boring, huh?
Yeah. Then you'll have to deal with your own psychology as that comes up, and resist the urge to not be bored. Boring financial life is not a bad thing.
I agree. Not everyone agrees with us, but who knows? Maybe in time they will.
And you reminded me as well. I would love to give a shout out to Miss Edstrom, the supportive wives who bless us to make these choices and play with our Bitcoins and support us all the way. There's uncountable many of those out there who have been on the ride and supported the ride, and over the long term, it seems to have worked out as long as you didn't get margin called.
That's right, and you are equally blessed in that regard. So,
Well, Andy, I have loved having you on. It's a pleasure to get to see you year in and year out, have you on, have you out to the site. I would love to get you back on again in the future. But in the meantime, where can people keep up with you, keep up with what you're working on, connect with you? And of course, uh, Why Buy Bitcoin is the book. It is 6 years old and yet timeless. You should definitely pick up Why Buy Bitcoin, especially for those people who don't yet get it. Huge help to help them understand what this is, why it matters, and how it fits in their portfolio. But how can people find you, Andy?
well, thanks for that, Bo. Really appreciate it. And I guess probably still the best option is Edstrom Andrew on Twitter, although I'm spending less and less time. But yeah, people want to reach out, they can, or if they want to, I guess they can email me at work. Andy@westcapgroup.com is also an option.
Awesome. Thanks so much for coming on, and look forward to the next time.
Me too. Thanks, Bo.